All right, sweet. So just got confirmation we're live. Hi, everybody. This is NeX. This is going to be our first introduction / lesson into Exocharts, where I'm going to be teaching and explaining Delta. This isn't going to be very lengthy. I'm going to try to keep it as short and sweet as possible, easy to digest. What I did is I created some slides for us to go through just so we can get a general understanding of what Delta is and how we can use it. So if you have a pen and some paper, I'd suggest taking some of these notes down. And once we get through these slides, I have some examples that I marked out on my chart that we will go through and take a look at. So let's begin. So Exocharts, order flow / footprint, and we are covering Delta. So there are two order types, as everybody knows, or assuming most people know. If you don't, we'll cover it here. The two types of orders are passive and aggressive. Your passive orders are what we refer to as limit orders, and your more active / aggressive orders we refer to as market orders. For a passive order to get filled, you need active orders to fill it. The market only moves from active orders. So meaning that if nobody ever placed a market order, then the market would be at a standstill. If everyone only placed limit orders, and that's the only way we traded, the market just wouldn't move. So it's important that we have market orders because that's how we move price. So Delta. This brings us to Delta, which is the sum of aggressive trades, longs and shorts, essentially just showing us who is in control during that specific candle. So it works the same way on any time frame you're looking at, whether it's a 1 minute, 5, 15, 30 minute, 1 hour, etc. Delta is always going to show us who's in control of that candle. So whether it's buyers or sellers. And Delta is going to be, it's going to show you Delta in two ways. It's going to show you positive and it's going to show you negative. Positive would be buyers and negative would be our sellers. So we'll go over to the next slide here. Okay, so we can work out Delta by subtracting the number of buys to sells in a candle, which gives us the Delta. Exocharts will actually work that out for us, so we don't need to do the math. And I can show you an example of that as once we get over to the chart. Oh, somebody joining in? Same active ingredient as Viagra or Cialis. Okay. All right, here we go. As price moves up, you want to see the delta increasing along with volume and open interest. And the open interest we'll actually cover in a separate video. For now, we're just going to focus on the delta, but you'll hear me refer to open interest as we move along here. So let me start over here. As price moves up, you want to see the delta increasing along with volume and open interest. This shows you that there are more active buyers pushing price. This is extremely useful, very, very useful when you're wanting to confirm a trend or just a direction of a day trade, or even maybe a quick scalp trade on the lower time frames. And it works vice versa. So if we're seeing price moving down, we want to see delta increasing, negative delta increasing, along with volume and open interest, showing that there is interest and there is active sellers who want to move this market. Delta. Delta is a very important statistic when you're trading in a range. It gives a very big heads up as to whether or not a range will break out or if that range will continue to trade within the value area high and value area low. Chemo, I'm sure everybody in the group, from what I've seen, refers to it as a zone. So in this case, delta is an important statistic, and it will give you a heads up as to whether or not that zone will break or if price will continue to trade within that zone. Delta will signal to me if I'm going to continue to trade short when price reaches the highs of a range or a zone, or to continue to buy the lows of that range or zone. I hope that makes sense. So you can't do this on the first rotation of a range or a zone. So what you need to do is you got to be patient and allow for a full rotation to develop first. You have to allow the data to come in when you're wanting to use delta to help you make an informed decision. So for this heads up, I like to see the last rotation to the lows to have been on big negative delta, but not taking the low. For this, I rely on CBD. So what CBD is, and again, we'll cover the CBD in a separate lesson. But I know in this group, we look for divergences with the RSI. So when I say CBD, just think of it like an RSI, right? So when price is making a rotation down to the lows, you see negative delta coming in, but price is not taking that lows, and it's creating that divergence, that bullish divergence. And then vice versa, if price is approaching the highs on increasing delta, but it's not taking that high, and you're seeing a divergence form, then that's on the RSI that would be the same here essentially as CBD. But in this case, CBD, it shows you where a bigger trader is and where they're sat with their limit order absorbing the market.
Produce.
We got somebody live. We got somebody's mic on. Whoever got your mic on, we can hear your background.
Please mute all your microphones till question period.
Okay, so where were we? Let's see. Okay, so let me just read this one more time through. So for this heads up, I like to see the last rotation to the lows to have been on negative delta, but not taking the low, and vice versa to the upside. The price is moving to the highs on increasing delta, but not taking that high. Okay, so when we see that negative delta increasing, but not taking the lows, or the lows had extremely low negative delta, so price is coming down to the lows on very low negative delta, we can kind of draw the conclusion that, okay, there's no interest in selling down here. So the likelihood of price to continue in the zone or the range is greater than price making lower lows and essentially continuing to trend down. Hope that part makes sense. That's important. So when we see the prices coming down to the lows on extremely low or negative delta, we can expect for price to move back in the opposite direction, and we would like to see increasing positive delta. So if price coming down to the lows on low negative delta, we can presume and assume that price will start to increase back up to the high of the zone, and we would want to see increasing positive delta as price reaches the range high or the high of the zone. Okay, if price reaches the high of a range and positive delta falls off significantly, it highlights that buyers are not interested in buying the high, and it's more likely to remain range bound and go back lower. So it's just the opposite of what I was just explaining there. If price reaches the low of a range and negative delta falls off significantly, then it highlights sellers are not interested in selling the low, and it is more likely to remain range bound and go back higher. So I put this in here 2 times because it's really important to understand, because most of the time price is going to range rather than trend. So it's important to make sure you understand that part. And if you want, take some notes on that. I'll give it a second here. I'm going to take a sip of some water. Okay, let's continue. So generally, when range bound, you will see active sellers at the highs and active buyers at the lows. For this, I look at the net longs and net shorts just to see what kind of activity we got going on. If price is coming down and we're at the lows, but we're starting to see that net shorts are starting to close, then that tells you that there's no interest down here. And then vice versa to the upside. If we're approaching the high of a zone or a range and we're seeing that net longs are starting to fall off in closed position as we reach that high, then we can come to the conclusion that it's more likely for price to just continue range bound. So that's important to know, because if, say, you get in the middle of a zone, which you should not do, right? We don't do stuff like that. But if you are for some reason getting in the middle of the zone and you are feeling like price is gonna, you're trying to go for that breakout trade, well, this will be your heads up as to whether or not you should continue to trade for that breakout, or if you should close profits or completely close the trade as you approach the high of that zone or value area high. So if that doesn't occur, then a breakout of the range on increasing delta is likely to get follow through. So what I'm referring to is if you're not seeing active buyers as you're approaching the high, or active sellers rather, if you're not seeing active sellers as prices approaching the highs, then it's a higher likelihood that you'll get that breakout on your increasing delta, and then vice versa to the downside. Another big thing, though, when we're in ranges is if open interest is building up, so you got a whole bunch of active buyers and sellers in the range, then you can kind of draw the conclusion that when the range does break, it's going to get good follow through. So that's why it's also important to note what activity are we seeing with longs and shorts. And again, we'll also cover longs and shorts in a separate video, but that one's easy. That one's very easy. Okay, so Delta helps you confirm the breakout instantly. So I use Delta in open interest, OI, to see how likely a breakout is when approaching a low or a high. So if it will be a fake out, a swing failure pattern / liquidity grab, Delta helps a lot. It helps a lot, and you'll see in the examples when we get there what I'm talking about. So if price breaks a high on large Delta with new longs increasing, I do not short the break of that high, but rather if I'm not in a trade, I just buy, I just enter at market and I buy with the strength, and vice versa for a breakout to the low. So if price breaks a low on large negative Delta with new shorts increasing, I don't long the break of that low, but rather I just sell with the strength of the market. Now, generally, I don't ever trade that way, and it's really risky business. But if you were to ever trade that way, Delta would be one way that you can kind of have more confidence that your trade will follow through. Take another sip of water real quick. Let everybody take a look at that. Okay. All right, so here we go. Here's a summary. So the reason you want to see an increase in positive delta when breaking a high or breaking a low is that it shows that we have more active buyers. So if you want to see increasing delta when we're breaking a high, that's going to show you that there's more active buyers that are coming into this market right now at this time that are supporting this price and supporting the move up. And same thing for the downside. If we're seeing increasing negative delta when breaking a low, it's showing that there's more active sellers coming into the market that are pushing price down. If price breaks a high with high volume, but on negative delta, that's a red flag, and you should look to fade that move. So that would be considered like your swing failure pattern or liquidity.
You want to explain Christmas with Daddy?
I'm sorry?
Can you explain Christmas with Dad?
I can't understand you. I'm not sure if you're.
Sebs, please mute your mic, Sebs. He's talking to his son.
Oh, okay.
It's not on.
No, we can hear you loud and clear.
How was that on?
We're almost there. Okay, so if you break a high with high volume, but on negative delta, so that's a red flag for me. Typically, I look to fade that move. I would consider that a swing failure pattern or liquidity grab. That's not what you want to see from a healthy breakout, and that's very common actually during news events. And so the one that we just recently had when we were at 18,390, that order block, I can show you an example from that as well, on price breaking the high on increasing volume but negative delta, and how that was a move that you would look to fade. So it's very common during news events. So that would be a heads up that it is a lot more likely to be that fake out, and you can either trade that fake out or you can wait for confirmation. I tend to be a little bit more aggressive with my approach to trading. Of course, with being more aggressive, there's a little bit more risk, but I just like to trade that way. That's my personal preference. But there are some ways that you can wait for that confirmation. One way is when price changes market structure to the downside. So if price was moving up, it takes the high on higher increasing volume, but negative delta, so closing below the previous candle's high. Then you would then look for a price to follow through going to the downside, changing market structure. Now you can wait for the change in market structure and buy once that market structure has changed, or you can wait for a change in market structure and then wait for that retracement to come back up to the golden zone or to the 80% or to the 90%, or even go back and take the high one last time and close back below the previous candle. There's a couple ways to do that, or the safest way to play it is you can just wait to see the high being taken on increasing volume but negative delta and then come back into the zone or that range, and then you can trade it that way as well. It kind of gives you more risk because you're waiting and you're putting your stop loss further away, but that is also one way to trade off of it. Another form of confirmation is getting price, getting acceptance back into the zone or the range on increasing negative delta and volume. New shorts coming in that's all just exactly what you want to see. So does anybody have any questions before we go to the examples? Anybody want me to go back in a slide so you can see something that I maybe went through too fast? No? Okay, cool. All right, cool. So I'm just going to assume everyone understands for now, so we'll just keep rolling. Okay, so let me close down this PowerPoint and let's go to the chart. Can everybody see my chart, or do I need to reshare my screen? Okay, gotcha. All right. Bam. Can we see that? Okay, sweet. So I actually went through and marked out some examples here, a couple of trades that I took, and then just a couple of trades that I just noticed were good for the sake of the example. Looks like we lost some data there, so we'll just move here. All right, here we go. So delta. We're focused here on the delta. So first example, we can see here. Let's turn this on. Or actually, we'll just keep the CS off, candle statistics. Okay, so let me zoom out for a little bit. So this was from November 23rd to this was on November 23rd price action. This is a 30-minute time frame, and this is when price made its high up at around $16,787. So initially what we see here is as price is approaching, you see market structure changes bullish. We come here, put in our highs, change market structure to the low temporarily before moving back up again. Well, this delta, how I look at this is, okay, where did we start? So when we put in our highs, change market structure to the downside, right? And then we started to change it again to the upside. So we started back in this region. So from this low to this high is where I start to look at the delta, the volume, the open interest, the net longs and shorts. So from here, we can see we kind of started off here small, right? 8 million in volume. Well, first off, we can see that price came down here. The first initial move down came down on 24 million volume, negative 7.4 million delta. The next attempt down, we just see selling kind of fall off. There's no selling, just buyers. And then here's our next attempts down to these lows. 7.5 million in volume, negative 2.2 million in delta. So that's a significant difference, right? From 24 million to volume to 7.5 million volume, negative 7.4 million in delta to negative 2.2 million in delta. And then we get our next candle attempt at the low, which was 9.8 million in volume, but negative 3.2 million in delta. So that's telling us sellers are closing positions. Sellers are not very interested in continuing to push price down. So then the next candle we get is we start to get our move up. And from here, we can see that it wasn't necessarily a strong move up in terms of volume increasing, but volume was increasing nonetheless. We can see here it starts with 8 million in volume, then to 14, and then kind of falls off. But then this high gave us that 24 million. When we look at the delta here, we can see that as price started to change market structure again to the upside, so where we started our genesis or where we begun, it was on 3 million positive delta. All right, and then we slowly increased from 3 million to 3.1 to 3.8, 3.5. So we're kind of averaging out here. 2.6, 4 million to 7.5. This is where we get the most volume though. And so this is another thing. Another thing I look at here is where is the most volume coming in? In this case, the most volume and the most delta from this entire move here. Let me just go like this. From this entire move up, the most volume and delta came in at the high. And that's not what we want to see. What you would want to see for continuation, you want to see as prices continuing to move up, you want to see volume increasing, you want to see delta increasing. You don't want to just see it increase impulsively at the last go of things. So hence our reversal coming. So here, whoopsie, didn't mean to do that. So here we can see that where we had our 24 million in volume, our 7.5 million in positive delta, the next candle takes the high. It's not on increasing volume. So in the slide I had said you want to see a high taken on increasing volume, negative delta. That's one thing you want to look for. Another thing you can also look for is if the price takes the high and it's on less volume. So if we take the high on less volume, close back below the previous candle with a negative delta, 3.1 million. I'm sorry if it's looking like a circle and it's blocking, but 3.1 million in negative delta, that's another signal of reversal. So one thing we can also do there is it hit the golden zone as well. So I hope everybody can see that. But this would be one way that you can look for that confirmation. So how we can do this again is we can look at the delta here. So we come up, right? 24 million volume, 7.5 in positive delta. The next candle, it takes the high, closes way below the high of the previous candle, and it's on negative 3.1 million delta with open interest. New shorts coming in at the high. That's where you want to be trading at. Okay, and so another good thing you can do is like when you're watching the order flow, you can see this right here and say, okay, here we may have a potential trade on our hands. Zoom out a little bit. We see that price is making higher highs, right? So being that we never buy at the high of the move, the only option is short or no trade. Well, if we don't feel comfortable just shorting because we see something like this, we see this high taken on less volume, negative delta with increasing open interest, well, we can wait for confirmation. And what I generally call this, when price takes the high of the previous candle, closes below, I call that the liquidity grab swing failure pattern. 9 times out of 10, it's going to give you a retest. So if you're not comfortable shorting right here, you can always wait for a retest, and you can see the retest was given. Price come down, and you can see that from this candle, that negative 3.1 million in delta, the next candle was buyers, not sellers. Even though this is red, it may look a little deceptive to most traders. They probably shorted that, but it was actually buyers in this candle. It was 5.9 million in volume, but 291,000 in buyers essentially. So waiting for that retest here, we can see the next attempt to the high was on 3.8 million in volume, but 207K in buying with open interest. That's far significantly less buying power and volume than this candle right here. The 24 million in volume and that 7.5 million in positive delta. That's significantly less. And it comes right into the golden zone. That signals to me short. So that's one example. Does anyone have a question about this one? Okay, cool. We'll keep trucking here. So there's one example of how I like to use the delta mixed in with the volume. Another one we can go to here. We zoom out a little bit. So this one actually, this big golden zone here that you see, you can still use this as well. So as I said, we'll cover CBD divergences in another video. But while I'm talking about it, let's take a look here. So CBD divergences, just like the RSI, guys, just like the RSI, you can use it for divergence. CBD is used for divergence. It shows you where the bigger traders sat with their limit order. So that big trader that wants to push price down sat up here with their limit order. And every time people are buying, you can see that all these orders, you want to see this absorption coming in with new money, with open interest, signifies new money, new longs, right? Net longs. We'll cover all that, but just bear with me. But you can see here that price come up right here. It created a big divergence. Someone is sat right there, absorbing all the buyers. So they're just selling into all those buy orders. You can see if you look down here at this yellow line, this yellow squiggly looking line, where my cursor is at, you can see where if I put my cursor right at the high, and then look right here, it makes a higher high on CBD. But when you look at price, it clearly made a lower high. So that could have been another way you could have gotten into this trade, and then that potentially a golden pocket as well. Let's see. Yeah, perfect. Golden pocket. So there was two opportunities to get in on a retest of the golden pocket if you didn't take the initial swing failure / liquidity grab right up there. Okay, so remember this is a 30-minute time frame. So the way I actually drew this golden zone, this bigger one that you see here, is as if we were looking at like a 1 hour, or if we were looking at a 4 hour from the high to the low. So what we can see when we pull it that way is, let's take a look. What did this high give us right here? So let's just specifically start looking at candles and attempts at highs and attempts at lows, because when we use order flow, we're not necessarily needing to look at every single candle unless we're following the move, like we're following the trend. If we're following the trend, we want to see increasing volume along the way, increasing delta, increasing open interest along the way. But when we're looking to buy or we're looking to sell, we just want to look at the attempts at the highs, essentially. That's I think is more important. So let's start doing that. So when we first look here, we can see that this attempt, first one into the golden zone, was on 14 million in volume, but 90K in positive delta. That is, there's not enough power in this candle to push through this golden zone. And you can clearly see we had a nice reaction, very nice reaction. But price comes right to the VWAP. Find support at the VWAP. You can see support. I was going to say a little bit of divergence, not necessarily, but main emphasis here, 90K in delta, positive delta. That's very weak. No buying power there. Okay, next attempt at the high. On 20 million volume, 4.4 million in positive delta. Now, remember, we're looking at attempts at highs and we're looking at attempts at lows. So let's go back. What did we have at this high? It was 24 million in volume, 7.5 million positive delta. Okay, this attempt, 18 million in volume, 4.9 million positive delta. Okay, this one, 14 million in volume, 90K positive delta, very weak. And then this one, 20 million in volume, 4.4 million in positive delta. So it's decreasing here. It's coming into resistance. golden pocket. Clearly decreasing. Volume, not so much. I mean, less, 4 million less, but 7.5 million in positive delta to 4.4 million in positive delta. So it's decreasing. It's clearly decreasing. We're at the golden zone. We're at resistance. Context is very important when you're reading the order flow as well. See, the benefit that we have is we use Elliott waves as well, along with some technical analysis that everybody may use. But with Elliott waves, this is where it's very useful as well, because, I mean, if we kind of look at this, this probably symbolizes, if you follow my cursor, maybe a A, a B, and a C, right? And then an A, got your B, got your C, and then another one, A, B, C, 3, 3, 3, C here, A, B, C. But essentially, you're wanting to mix this in. You're looking at attempts at highs and lows. Does this follow my Elliott wave count? Are we at resistance? Are we at an order block? Are we at a VWAP? What's the context of this move? Are we, if someone's considering buying here, they should be asking themselves, well, what have we done? We've come down, we've changed market structure. We made an attempt at the high. We're not taking this high. This attempt's coming into the golden zone. We're not taking this high still. Volume's decreasing. Positive delta is decreasing. We're getting a reaction at the golden zone. Let's look at the next attempt to this high here. 15 million in volume, 31K. If that one is not screaming short me, guys, I don't know what is. From 24 million to 20 million to 15 million. Delta from 7.5 million to 4.4 million to 31K. Into the golden zone, and then notice we have a divergence. We come here. I have a little bit of divergence coming. Well, okay, you can actually see it on a little better on the 5, but you can see it right here. Right there. It's a little bit hidden, but this is essentially on CBD, it's showing that price came equal to this high, and we can see that it clearly did not. It didn't. So we get a lot of, what do we see here? Shorts opening, short. This short got a little bit too aggressive. Price comes back up, takes stops here, right? Grabs liquidity, closes below all these candles. So if we just go like this really quick, just go like that really quick, just like that. Get it lined up as best as we can. Oh, that's not straight. Hold on. Okay. Price comes up, takes the stops, closes all the way back down here. All the way back down here. Right there. So this took the high, right? It took these highs. It didn't take this one, but it took these ones. So, you know, if an amateur is looking at this, they're probably going to say, oh, there's another change of market structure one. No, it's not. We haven't taken this high, and we haven't taken this high. So what do we class that as? If we're at resistance, if we're at closing below the VWAP, if we've taken all these stops up here, we're getting a reaction at the golden zone. We're closing it all the way back down and below the VWAP. That's a sell. All right, that's a sell. That's one way you can read the order flow as well. It's always focused more on when you guys look at this, if you guys decide to look at this, put more emphasis on attempts at the highs when you're at resistance, attempts at the lows when you're at support. So let's go to another one. This one right here. So we can see price was kind of ranging out a little bit. This would have been a scalper's paradise, right? Bam, 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 bam. Kind of playing around the VWAP. But this is an example of when you have increasing negative delta and increasing volume, but price, it didn't necessarily, it made a lower low, but in the context of what we're looking at right here, it doesn't really look like a lower low, does it? No, I mean, to me, it looks more like a stop hunt, swing failure pattern, liquidity grab. What you notice is this low that we have here. Okay, so let's start here. Price comes down. Price comes down in this candle right here. This big red candle right here with 65 million volume, negative 16 in negative delta. So sellers are wanting to push this price, but no one's interested in doing that. So this, when you're normally seeing price coming down and you're seeing the open interest is red instead of blue, it's signaling more that we're just going to grab liquidity, right? I mean, because let's follow the next candle, next two candles. Next candle, we go from 65 million in volume, negative 16 million in delta to no selling. Here, there's no sellers, no sellers, no sellers, no sellers, no sellers. Selling just dies. The low that we actually get was on 20 million volume, 860K in positive delta. So price come down, it takes this low, swing failure pattern, liquidity grab. Price comes down, takes the stops, closes back above this level. The previous candle's low, closes right back above that level. Starts to range, and then hits it one more time. So here, it hits it with this, what we can see is less. So in the slide, I said if we're approaching with less delta, decreasing negative delta, that's a sign that sellers really aren't interested. They're really not. But this price had to come down. We had to clear some liquidity. We had to get people out of there so we can push it back to the other side. People who wanted to buy early, essentially, early longs. But we can see, yeah, price comes down, takes the level, right? Takes this low, closes back above, closes right there. So closes above this low, this low, this low, this low, well, which is not really a low, but the low of the candle. And it's on less delta. So we went from coming down 65 million in volume, negative 16 million in delta, to negative 4.2 million in delta, negative delta, and 36 million in volume. So what happens after that? We can see the delta, then we get a reversal. Essentially what we get is a reversal. We take liquidity, we close back above, we get an engulfing candle almost, right? Almost close above there. But we get a big candle to shoot to the upside. Following that candle, we see again 60 million in volume. So where's the last time we saw that was back here? 65 million in volume, negative 16 million delta. But it kind of revisits us again, but this time the effect is different. We see 60 million in volume, negative 36 million delta, sellers. But look at what it creates. Look at what this creates here. It creates a massive bullish divergence. Massive. Higher low, but on CBD, a lower low, right? And it started with this. And this was open interest. So this is new money coming in here. So an aggressive seller, somebody very aggressive, decided they want to dump $36 million for a short right here, misreading the context, thinking that maybe this was going to come over here, take these highs just like it took the low, probably thinking it's going to take these highs, roll over, drop back down, continue the trend to the downside. But they misread the context completely. Because when we zoom out, we can see that this is a part of a correction. Let me get rid of that. Let's get rid of that. That's bothering me. Okay. Yeah. They misread the context. This data can be added. Just come over here, add more days, and it'll give you the rest of those candles back there. But price was down here. It was at the highs. It came down and corrected itself. It's already done its correction. So it kind of looks like A, B, A, B, C, A, B, C, A, B, C. So, and then what is that? 5. 1, 2, 1, 2, 3, 4, 5. So the person who decided to short here, they completely misread the context of the market. They were expecting continuation. Continuation did not come. Well, what are some reasons that I think that they couldn't have known that? Or maybe they're not learning from Jim like we are, right? Elliott waivers. And maybe they don't have exocharts and they can't see what's just happened here. They can't see that there's 65 million in volume brought us down here with negative 16 million in delta, but that the second attempt at the low was actually a liquidity grab, and it was on significantly less delta, significantly less aggressive selling, negative 4.2 million, which closed way above the level. And maybe they can't see that when they place their order in the market, the negative 36 million, right? That it created a massive bullish divergence. That there was a bigger trader in here absorbing their money. Maybe it's the same trader counter trading themselves. I don't know. That doesn't matter though. The fact is they misread the context. And with Exocharts, we can see, first of all, we can see our Elliott wave counts. Second of all, we can see the order flow. And along with seeing the order flow, we can see the divergence. We can see where is that bigger trader sitting with their limit order. Okay. So there's another example right there. And also, check it out. Came into the golden zone. Perfectly. Right into the golden zone. So what happened? They sold it there, negative 36 million. And then where did the selling go? Where did this selling go? It went bye-bye. It just disappeared. Completely disappeared until it came back over here. And then this candle essentially did the exact same thing that this one did. The one that this one did takes this low, closes back above. What did the same thing here, guys? It did the exact same thing. It comes down, not so deep, but it comes down, takes this low, this candle right here, takes that low, closes back above, and it just so happens to be at support, golden pocket. So it's clear that when you see that someone has misread the context of the market, let me zoom out one last time. When someone misreads the context of the market, A, B, C, or W, X, Y, and then this was, assuming that was a 3, and a 3, which retraced more than 90 or more, right? And then we got our 5. But when you see someone making a mistake like that, that's your opportunity to capitalize. When we know Elliott waves, we know other TA as well. We can take advantage of this stuff. And you can capitalize. You're in the golden pocket. Start buying it. You see this Yahoo wants to sell. Say, okay, buddy, you made a mistake, and I'm actually showing an account that's more aggressive and more bullish. And so let's look at the attempt again really quick. So one more time, 60 million in volume, negative 36 million delta, negative 36 million. Now let's look at this attempt. 20 million, negative 3.3 million delta. That's less, significantly less, right? That's less. And then now take a look at this. If you look at this low, look at where it is in comparison to this low. Even though this low is literally right up here. It's up here. This low is down here. That's still a bullish divergence. And it just happens to be in the golden zone. If we pull the trend line, oh, where's it at? Where'd it go? Right there. You pull the trend line right there. That's still divergent. In the golden zone, after a 3-wave move, you're expecting 5 up. Okay, so there's another example. Let's keep going. What was this one? Why did I have this one? This one it wasn't divergent. I think this was more attempts. Was this one attempts? No, we can pass over this one because what we've just done pretty much is we just kind of went through the context, right? Context is so important. As Elliott wavers, I think we get a better understanding of context. But yeah, adding order flow just makes it so much better. Okay, so here again, we have our 5-wave move, right? So we saw what I'm assuming. I'm not looking at my chart right now. I can't just pull it from my memory, and I'm not that good. But I'm assuming this was a 3, 3, and a 3, right? And then we got our 5. I'll just say that. But let's look now. Remember, we're wanting to read delta when we're at lows and we're at highs of the move. So like stuff like this, like these highs, if you're a scalper, perfect. That's good. Take it. If you're a scalper down here, okay, good, perfect. Or a day trader, whatever. But if you're wanting to get the ending of a 3-wave, the beginning of a 5-wave, the price coming to support, price coming to resistance, you want to be looking at highs and lows, just waiting for your support resistance levels. So we see that price is what looks to be a completed 5-wave, right? Looks like 5 waves done. Let's take a look. Okay. So we come up over here. Let's just look at the highs. 23 million in 23 million volume, 4.2 positive delta, 4.2. We got a little bit of buyers in here, but there's no open interest. Nobody's interested in this one. No one's interested there. So we look at our next attempt. Our next attempts to the highs. So we're wanting to look for buying, right? Because we always get that back test. So it was 4.2, 678K, 1.3, negative 164. Buying is falling off. Volume is not increasing. Delta is not increasing. It's decreasing. And then we get our reversal, right? But this one, this is one of the scenarios where I'd be waiting for more data, right? I'd be waiting for that A, B, right? I'd be waiting for that B wave. So that retest, I wouldn't call this a retest. That's too soon. You don't get that reversal in just 1, 2, 3 candles, right? It's never going to be that easy. And I'm sure we all know that. So, always wait for that B to complete, trade the C wave, trade the 3-wave, whatever you're looking at. But let's look back at the attempt at the high. So here's an example of what I had mentioned in the slide, price taking the high on increasing volume, but negative delta. Let's look back, 23 million volume, 4.2 positive delta here. Now, this next attempt at the high, liquidity grab, swing failure pattern, because why? It closed below the level. This high, we put that line right on that high. Their stop's going to be up there. People are impulsively selling this, right? They're not going to be patient. They're not going to wait. They're not Elliott waivers. They're not waiting for the A, the B, trade the C. Price comes up here, more than 90%, takes the high, closes way back below. But what did it do? It was 90 million in volume there. So increasing volume, but negative delta. So it took the high, increasing volume, but also with negative delta, negative 5.9 million to be exact. And I want to say, no, that wasn't news. Never mind. Actually, it might have been news. Was there news on December 1st? I don't know. But yeah, there's an example right there of taking the high on increasing volume, but negative delta. So I'm assuming by the looks of this candle, this was a pretty volatile day, or this was the start of a session, maybe New York. What time was this at? Yeah, 4:30. So this is probably the beginning of New York. They run the lows, run the highs, right? Get people, or probably ran the lows and then ran the highs, right? Get people thinking we're going down, then run it up, take the stops at the highs, and then continue back down. But when you're trading this, if you're depending on what time frame you're looking at, always wait for the candle to close. Always wait for it to close, right? Because this could have done this, could have came up here, takes the highs, comes back down on a lower time frame, finds support on the VWAP, and then just shoots right back up, closing above here, and then continues up. So the first confirmation is always be patient and just wait for the candle to close, and then read the data, read what you have. Read your count. Read your Elliott wave count. Read what's the context. Where's our support? Are we at resistance? is there a 5-wave move completed, right? And then make your informed decision. So after that, you see an increase in delta right there. So from here, remember, you're not. It's not always going to just be like, okay, negative 5.9 million, negative 6.9 million, negative 7.9 million, negative 12. It's not going to increase like that. One candle, one. It's not going to increase like that, guys. It's not. You're going to have these candles where it's negative 5.9, and then you see negative 2.8. Be patient, because then you can see you had some buying, backtest that VWAP, resistance, and then you can see there's the increase, negative 12 million. Now the volume hasn't increased, but that's okay as well. Volume doesn't need to increase quite yet, right? Remember, we just left the high, so the majority of it is going to be there. The most activity was at the high where it should be. But as we move down, you can still see it's there. It's there and is enough to move price, but delta, you saw it increase right there. So there's another example. And then let's take a look at this. This might be a 382. Look at that one right there. Oh no, that's a golden zone. So sometimes you see when price front runs golden zones, and you're wondering, and you're waiting on them, and you're just like, dang man, I was going to take that trade. You know, it looked like a good trade. It was golden zone right there. Well, when you're looking at order flow, it actually does hit, right? So my pool is not precise to the dot, and it's probably just a little bit off, but it's one of those things where you got to imagine other people are probably waiting for this too. But with Exocharts, you can see it actually did hit the golden zone. Orders were sat there. Orders were placed there. They were. So I consider that a hit. It's close enough. Yeah, I consider when I'm looking at Exocharts and I see something like that, I'm seeing a swing failure pattern right here that had increasing volume, negative delta. I see an increase in delta here. And then I'm looking for a retest because I didn't get in here. I didn't get in here. I wait for that retest here. That's close enough. I'm going to take that short. But stop loss, I would definitely not put it there. If I'm thinking it's going to be a longer day trade or a swing trade, then I would put it there. But I'm not comfortable with stop losses like that. I like to be like as tight as I can sometimes. So I would just have it right there. And if price would have just continued to come up, then I get stopped out. It's not the end of the world. But yeah, I would have took that short. You can see price retraced a little bit, took the stops. And that's common. You'll see that a lot too. And I'm sure you guys already noticed by your statistics and just your experience in the market that, you know, price, you'll get that initial move and then it'll come back and take it out again, just like here. You'll get that initial move, then it'll come back out, take it out again. Right? You get that initial move where people want to sell the golden zone, right? They didn't make it clean, so they had to put in a good high because this high was boo-boo, right? It was trash. So they had to come and clean it up, bam, before they went back down again. But you can see there's increasing delta again. So this is a good example. So if you guys decide that this is something you want to take on and you start reading the order flow, you got to be patient because you can see, like I said, it's not going to be increasing one candle after another. When I first started reading order flow, that really messed me up. I would close trades too early and I wouldn't leave trades on long enough. Because I was always expecting, okay, this candle or the next two candles or the next three candles. But look at how it spaced itself out. Negative 5.9 million here, then negative 12 million there. So where's the next increase? It didn't increase here. It didn't increase here. It actually increased there. Negative 13. And now this time on 92 million volume, negative 13 million delta. But this one, remember, this is where context is important. So this one looks like that could have been the A, the B, I don't know. I'm not even going to try to read that right now. But you can see here that this looked like a completed structure. Potentially, what did we get over here? Yeah. So that potentially was a completed. This. Does anybody remember this structure off the top of their head? Maybe not. I don't. But this was potentially a completed structure. But what we can see is this is kind of the same as this over here. I'm not losing you guys. But this one right here, swing failure, right? Move to the upside. And then we got the same thing here, bro. Swing failure here. Liquidity grab. Right there. So this one was on increasing delta. So this is another tip when you're looking at delta and you're taking lows or you're taking highs, you can have more confidence that this price would have continued to come down if it closed below the level. If it closed below the level. But you saw increasing volume, increasing delta, takes stops and closes back above this level, these lows. Well, it has different ideas then. You can kind of draw conclusions that it has different ideas. And then what do you see after that? You see this increase in delta. This would have been the first sign for me, take profit. Seeing this take the low, but closing back above, seeing increasing volume, increasing delta, but price isn't continuing down, that's take profit. And if, like I said, if this was a completed structure, you're taking profit anyway. But let's keep going. Let's see what we see here now. So again, we're going to cover. I can cover CBD divergences. Again, it's just like the RSI, how you use it for divergence, right? Just like the RSI, but you can see one right there. Bam. So after we do that swing failure pattern, again, just like here, you get that swing failure pattern, liquidity run, liquidity grab, divergence, bullish divergence. Let's go back. Liquidity run, here, takes liquidity, and then immediately divergence. CBD line is making lower lows while price is making higher highs. And then this might have been a little bit of a bullfight. Let's see. And then a cool thing too that you guys probably will like is that on Exocharts, at least on the Exocharts Pro, you can use your tools. So yeah, 382. I have a feeling that this measures potentially there. So maybe a little bull flag there. I don't know. But this is a way that you can use delta, guys. Liquidity grabs. I know some of you guys like to use liquidity, right? Chemo. I know you like liquidity. You like order blocks. You can use these for order blocks as well. And so, yeah, divergence there. CBD divergence. A bigger trader was sat down at these lows wanting to fill their bigger order. So they had a limit order sat down here somewhere, wherever this found its halt. So this, that's a 16,750. Bigger trader most likely sat right there. Price came down, took out the stops. Now they're able to fill their big order, start pushing price back up, limit, and then start market buying into all these sells that are coming in here, creating that bullish divergence. It comes over here, actually. So that's pretty clear, in my opinion. So there's another one, and then I think we just got a couple more. Yeah, we got a couple more. Any questions? Anybody have any questions? Am I losing anyone? Everyone following?
Yeah, question about maybe looking for the next trade. Maybe how you start your process of structuring a trade from start to finish.
So essentially, what I do is that process starts on my chart. It starts on my chart. It starts at the count that I'm looking at. It starts at where we are in relation to yesterday. It starts with where am I at in my Elliott wave count? Are we following the count? I also use support and resistance. I showed Seth and I think Sebs a couple of days ago, maybe it was last week, how I mark out my support and resistance. And then I briefly showed you guys the naked point of controls that I use. It's another template that I can cover in a separate video. But essentially, you just fit this into your system. So if you have an area on your chart on TradingView where you say, hey, this is a good level to buy, or hey, this is a good level to sell. Okay, look at your structure. That's all I do. I just look at my structure. Is this a 5-wave? Is it a 3-wave? Okay, if that's a 5-wave, I expect a 3-wave. Let's look at some targets, right? So if we're coming down here, if we pull the fixed volume profile on this right here, that's probably 750 is essentially, it's probably the equilibrium of this little last consolidation zone. So let's just say I'm not in a trade and I had seen this. I seen price up here. I see this happen. I didn't take it. I didn't take it because I'm seeing a 5-wave. So I'm looking for another 3-wave down for another potential 5-wave up, potentially. Then I'm trading liquidity. I'm saying, okay, where are all the stops at? Is this 3-wave completed yet? I'm counting. I'm looking at that. I'm looking at where are my levels, where's my support and resistance. It's just as simple as that. It doesn't need to be complex by any means. It doesn't need to be complex at all. And you're not necessarily using this to, okay, so one trade into a negative. This is purely based on your style and your personal preference. So I use this on the 30-minute time frame. And so like this one, I actually did take this short, but I didn't take it here. I took it here. Back test of the VWAP is where I took this short. And I was fortunate enough to catch that negative 12 million delta. But if you're thinking, how do I want to implement this into my strategy? Start with Elliott waves. When you're charting when you're doing your count and you're looking at like a 30-minute or a 1 hour, start it just like this. Like you can even see it right here. There's a 5, and then you look for your 3. So if that's the case, then you want to be paying attention when you get up here to the top of the 5, right? So this, if you were long, okay, there's a completed 5. Let me take profits up here. Let's say this is the 1618 or the 2618, then you're taking profits. Takes them off the table because you know that after a 5, you're going to get a 3. So if you take some profits off the table and you know that you're looking for 3 down, well, then there's your next trade right there. You're looking for 3 down. Your next trade is a short, and it's going to be in this region. So now you look at the order flow. What is the order flow telling me? Am I seeing a liquidity grab? Oh, there's one right there. Okay, did it take the high on increasing volume, but with negative delta? Yep, there it is right there. Okay. Remember, on 9 times out of 10, when you see a liquidity grab, you're going to see some form of a retest. This one just happened to not be great. It just happened to not be great, but it gave it back to you right here. And it even gave it to you right here. If you had the patience to hold that with conviction, then you would have been paid out and it would have been quick because this one was volatile. So then again, if it was a 5-wave move up, I'm looking for a 3-wave down. So if this is again the 2618, I know that I need to take some profits. I'm not because it's not going to go up forever, right? So then I look for 3 waves down. I just got a whole new setup right there. I have a completed 5. Now I look for a 3-wave down. Order flow is giving me confirmation that this is a little bit more bearish because we've taken the high, but we didn't close above it. It was increasing volume, negative delta, which closed below it. There's a short right there. There's your next trade. And so since we're in the mindset now that we're looking for 3 waves down, well, there it is. There's your 3 waves down. If that's 3 waves, A, B, C, and then 5, so 3, 3. Well, it can't be a 3 through 5, so 3, 3, 3. I don't know what that is. But if we're looking for 3 waves down, then you know that, okay, let's assume this is the 1276. I need to take profits here. Especially if you see that right there. If you see that right there, increasing volume down here, increasing negative delta, but price is closing above this level, this last low, and that's signifying liquidity grab. Yeah, you take profits right there. And then if hopefully you're still in your long from the 5-wave move up, you just compound a little bit. You know what I mean? So it's all your personal preference. It's all how you personally trade. That's how I trade.
So you
5s and 3s.
looking for an interest zone of like a 3-wave back. You'd have your zone of interest where you'd be looking at, and then you want to see your Exocharts kind of match what you're thinking.
Yes, yeah, because Exocharts, the only thing it's going to do for you is just going to confirm your bias, and it's going to give you more confidence. There's another template that I'll end up sharing with you guys too that'll even increase your confidence more when you're wanting to short or long, because what it's going to do is it's going to give you a buying signal or a selling signal, and I find it really useful. Actually, let me see right here. You see that red shade? That green shade. There's a buying signal. See that red shade? It's a selling signal. And you see what happens? Price comes up, you get the selling signal, price moves down. Price comes down into this zone, you get the buying signal, price moves up. So I can show you guys how I use that. And that just gives you more confidence when you're wanting to take a trade. Say you even have big size, your count matches, you're at resistance or you're at support, and you get a buying signal. Oh yeah, that's money right there. That's what you want. So it's all your own style. Order flow just confirms your bias. That's all it does, and it gives you an edge, right? I mean, it gives you a humongous edge on everybody else that's in the market. Everybody in the market's not seeing this stuff. They have no idea. They are clueless to what is even an Exochart. What is that? What is order flow? Then they're thinking it's order flow on Bybit when or on the platform when you're looking at all the orders coming in. That's not, no. This is humongous. This is a big edge. I've made very good trades by using order flow. This was before I even knew Elliott Waves. So with Elliott Waves, it just makes it more better. The monthly subscription is about $28 a month. You can decide if you want to subscribe for 1 month, 3 months, or 6 months. I subscribe for 6 because I mean, you pay. You subscribe for 1 month. I mean, you can pay your next payment off of like one trade. One trade, it covers his bill. One trade at like 0.5%, depending on how much size you use, but it covers this expense. So it's easy. Okay, so let's continue. And I think I went a little bit over that 30 minutes I told you guys about. I haven't even been watching the time, so I'm sorry if I'm kind of getting on here. But let's go back to another attempt at the high. Wait, yeah, okay, right here. So here's another attempt at the high. 33 million in volume, but only 6.2 in positive delta. Let's go back. What do we have here? This was our last attempt, which was 90 million in volume. This attempt made a higher high, and it closed above. Wait, did it close above? Hold on. Let's actually pay attention to that. Let's pull a trend line really quick. The top of that high to there. Did it close above? Okay, so it kind of did close above. In this case, I'd call this a failed auction. So price was trying to. It didn't close below. It closed above. It was attempting to, but at the last minute, it didn't find enough strength. And what do I mean by that? Well, look, 33 million in volume, right? Our last attempt was 90. This attempt was 33 on 6.2. So why did I just say buying just kind of just died off? Like people just all of a sudden weren't interested, because look at the next candle. 11 million in volume, negative 1.3 in delta. But look at the next buy attempt. So you want to look at the buy attempt. So when you're looking for, so let's say we're at the high, I want to sell. I'm going to wait for confirmation first, though, right? Because price could just come like this, down and then swoop right back up and make new highs. So I want to wait for confirmation. And I didn't get that swing failure pattern, but I know we're at the high. And then if I'm looking at a count, and the count makes sense that this is a completed move, I know we need to go down, but I don't see a swing failure pattern. I don't see a liquidity grab, but we are at the high, and the only option at the high is short or no trade. Short or no trade at all. All right. So keeping those things in mind, and that's what I mean by when I say context. Context is so important. So bearing those things in mind, let's look at the next attempt at the buyers from the buyers. What are the buyers going to do next? Because they already did 33 million in volume, 6.2 in positive delta. Well, look at what they did next. 3.4 million in volume, 278K. That's nothing. That is nothing. Okay, we might have a trade here. Let me pull the fib. Let me pull the fib. Let me pull the golden zone. High to the low, which is actually here, because we didn't get this yet. So it's actually right there. We might have a trade here. Let's wait for the attempt. We're at the high. I want to take a trade. Let's just assume that we have resistance here. I'm sorry. Let's assume we have resistance here. I don't know what it looks like on my trading view chart, but it's the high, and we did get a reversal, so I'm assuming there was resistance, right? So we might have a trade. Bam, right into the golden zone. So let's look at that attempt. 7.2 million volume, 257K positive delta. So we went from 33 million in volume, 6.2 million in positive delta, to our retest at the golden zone of 7.2 million volume, 257K in positive delta. People don't see this. They don't see this. They see something ugly like this high, and they think that price is going to retrace and it's going to move up. with order flow, you get to look inside of every single candle. You can see exactly what's going on. And you can be aware of this before everybody else. You can be aware after you see this 3.4 million in volume, 278K. Okay, what's next? 7.2, but less delta. The aggressive buying, active aggressive buying is falling off. It's falling off. We're at a high of a move. We're coming into the golden zone resistance. Right? That's a sell. And if you have your Elliott count that matches that up, then you're in the green. You're selling, but you're in the green. And so how did this kind of play? Let's see if we had increasing delta to the downside. We had increasing volume, 10 million, 11 million, 13 million, 42 million, negative 4.4 million delta, negative 3.6 million delta, negative 5.1 million delta. Delta is increasing. Volume's increasing. 30 million in volume. Here we go. Something's going off. Something's off. 30 million in volume. Why is something off? Negative 2.1 million delta. So we've already done this move. We've already done the move. Are things changing? You kind of see, are things changing? Something's starting to change, right? So this is why it's important. This is why I say it's all your preference, right? Because sometimes some people like me, I would see something like this. I would see this attempt at the low. I would see this first. I would see this context first. Look at what we've already done. Look at what's already happened. What was this count? Okay, now what was this count? That's what I would be looking at on my trading view chart. And then if that makes sense to me, then I'm coming over here and I'm seeing this. Okay, delta's just significantly started decreasing. So from 30 million volume, negative 2.1 million delta, to 19 million volume, to negative 1.5 million. I've been trading order flow enough that I would take this trade. As a beginner, you probably want to wait for a little bit more confirmation, but that's enough for me. That's enough. It's decreasing now. We've already had this move right off the golden zone. My count makes sense to me. I'm going to take that. I'm going to scalp it to the VWAP, right? Or to this high, because usually what happens is when price is going down, you guys know, you'll see these consolidations and you'll see that last little drop, but it'll come back because people are aggressively selling. They see this, they say, oh crap, let me sell. Price just comes right back up. And it comes to take this high out because, everybody in the mob knows that people are shorting down here and they just put their stop loss right there. They should have been shorting right there, the golden zone, or they should have been shorting right here, the VWAP, stop loss above the high, right? But no, they wanted to wait till the end of the move, short here. So then what happens is price comes back, get a little range, comes back again, takes the high right there. Those stops that were right there, people who shorted at these lows here, price comes up and takes their liquidity. Then what they probably do, open interest probably starts coming in for longs, right? Long, open interest, new money, new long, because they see price has moved up. And they're thinking, oh, price has just changed market structure. But no, what did it do? It closed below the level in fashion. It closed not just below that level, not just below this level, also below this candle, and this candle, and below the VWAP. That's a liquidity grab, swing failure pattern liquidity grab. So they probably start longing, right? Longs coming in. You can see it right there. New long, new long, new long, new long, new long, new long, new money, new money, new money, new money, new money, new money. They're longing this. And so what does it do? It took the highs to the upside, and it comes down, takes these lows right here. And then we get the same exact thing. Swing failure pattern of the low. Swing failure pattern of the low. Let's take a look at this delta though.
Rinse and repeat. Swing failure pattern.
Yeah. Exactly. It's just the same thing, guys. I mean, When you use Exocharts though, like see, sometimes you'll see swing failure patterns when you're looking at your trading view and you'll say like, or liquidity run, whatever you call it. I call it swing failure patterns, right? So you'll see swing failure patterns like this, like that, right? See something like that. And people will think, there we go. That's it. These lows are horrible. There was a double bottom and it takes that. But when you look at trading view, this wick right here, when it took the low, when it broke this level where these lows are, this wick has no depth to it. It has no depth to it, meaning it's not a good low. But amateurs, rookies, they're gonna long here. They're gonna see that they're gonna long here. They're gonna put their stop loss right there. They're gonna put their stop loss right there. And this is where patience really pays off. Because what happens? It does the same thing. Swing failure. If we go back to there, swing failure pattern. Here, swing failure pattern. Here, swing failure pattern. So what does it do? Delta. Volume in delta. 47 million in volume, negative 15 million in delta. Negative delta sellers, right? Although this is something that you want to see, right? Price taking the low with less delta, because that shows weakness, that shows just a liquidity grab. This is not, no, this has no depth to it. This is more of what you want to see right there, because let's take a look. Let's take a look. So again, 47 million in volume, negative 15 million in delta, takes that low, all right, clears those longs, the people who decided that it's probably a good idea to long in this candle and this candle, which they're not wrong, right? You want to long the lows, you want to sell the highs. They're not wrong. They just were impatient. They just weren't patient enough. So that's kind of what you want to see, but not in this fashion. No, this has no depth. This isn't deep enough, right? This isn't going to freak people out. This isn't scaring nobody. It's just a quick tap. Scalp trade, ABC, bam, to the VWAP. Quick scalp. But here, you see 48 million, negative 9.6. So decreasing delta. I'm trying to get it all on the screen so you guys can see, but I know it's probably going to look small. I don't want to have you guys squinting, but this attempt was negative 15 million. It was negative 15 million in delta. This attempt, this bigger liquidity grab, was negative 9.6. The volume slightly increased, right? So increase in volume, increase in volume, but a slight decrease in delta. But look at where it closed, because if you were unsure, this could have made you sure right here. Look at where this dang thing closed. It didn't just close right here at the level of this low, but it closed where? Above the VWAP. The swing failures that we've seen to the opposite side, where did it close? Below the VWAP. It's like the same exact thing. Where's the other one? Same exact stuff. Where did this one close? VWAP, not below, but at the VWAP. VWAP. VWAP's important. If you don't use VWAP, use VWAP. This one, swing failure pattern. So the point is, this is bullish. This may look, or maybe to some people, this may have looked bearish, but look at where it closed. It closed way above. It closed back inside of this range. If we put a fixed range profile here, it probably closed at the point of control, or at least the equilibrium of all this, right? That's what it appears to be. And so then what do we get? Let me slow down and take one step back. Let's assume that we didn't talk about this liquidity grab. Let's just look here. An attempt at the high. So we come down, we put in a mini range, mini zone here, right? We get one attempt at the high here. Takes these highs. This is scalp trading. This is scalp trading stuff. But it takes these highs, right? This candle takes these highs, closes below the level. Takes the high, closes below. So it takes the high on increasing volume, but negative delta. That's a sign of a reversal. You want to fade the move. You want to fade that. And just like the slide was saying. Okay, let's look again. We get it again, literally again, right next to each other. Takes the high, look, put in poor high, poor high. We get a little bit of a low, but we have these poor highs, right? VWAP. This is scalp trading stuff. But look, takes the high. This was the attempt here. Let's look at this candle. This was the most recent attempt in relation to this one. So let's use this as an example. It was 2.1 million volume, 282K in positive delta. This one takes the high, 2.9 million volume, so increasing volume, positive delta. But this is where, see, scalp trading, I would have to do a separate lesson on this because, this one's a little bit more, I think, complex per se, but I don't think it's so complex that you can't understand. I mean, you guys, if I can understand, you guys can, trust me. But you can see a divergence there, right there, right off the rip. Look at where this high is. It put in a high, closed down below, right? But look at the CBD line, way higher, but price is putting in a lower high. So it puts in a lower high, swing failure pattern, closing below the VWAP, with an increase, though, not a decrease this time, but with an increase. And so, being that it was an increase, you have to ask yourself the question, why did it not take this high then? Why? Well, because a bigger trader sat here with their limit order, hence why we have our divergence, our bearish divergence, and it's a good one. It's a good bearish divergence. It's you can scalp that all day. So there's another example. Any questions? Anybody? Okay, cool. All right, so then let's see. Okay. Okay. All right. We'll do. Okay, I'll skip over the divergence since that's not really our focus then. Just do a couple more on delta. Couple more on delta. Okay, we'll do this one. Actually, you know what? Yeah, we'll cover this one and then we'll do this one. So we'll just do two more and then we'll start wrapping it up. Okay, so here we understand what the context was here. Swing failure pattern, right? We just take this liquidity, same thing that we saw in the past, and then we keep pushing it forward. Okay, then we come up to the highs now. Now we're at the highs. So what's our attempt? We get 68 million in volume, 5.1 million in positive delta. Bam, there it is. Let's mark that. 5.1 million. 5.1 million positive delta. 68 million in volume. We got to remember that. And what I like to do is I write it down because you can see it's spaced out and you don't want to keep going back and forth. So I just write it down on a piece of paper. Then that way I can just look at it easily and easier to make decisions that way. Okay, so 68 million. Now this next attempt, 30 million, takes the high, closes way below swing failure pattern. But this time, 2.4 million delta, positive delta, buyers at the high. We can get into imbalances too, but you can see a majority of the buying, the bigger buying, came in towards the highs. Look here. These numbers you see on the right, these are all buyers. The numbers you see on the left, these are all sellers. But look, 1 million in a buy order right here, 1.1 here, 1.7 at the damn high, literally at the top. Someone decided, okay, I'm going to buy 1.7 right here at the top. Market traps them, closes back below, right? But that's a move you want to fade, guys, because volume is not increasing. From 68 million to 30 million, that's not an increase. From 5.1 million in delta to 2.4 million in delta, that's definitely not an increase. And price is closing below this high where we had put in the highs. No, that's not an increase. That's a move you want to fade. You want to short that all day. All day. On the lower time frames, we may have gotten that back test. I'm not quite sure. I presume it's there though, maybe on the 1 minute. And if it's not, then it's just another case of wait for the CC retest, the golden zone retest, which you can see range here. We got it right there. Okay, so let's look at this attempt one more time. This is the last example, and then we'll start wrapping it up. Oh, let me take a sip of some water. My throat's getting dry. Ooh. Okay. All right. So we had our swing failure pattern, and then what did we get after that? We got 3.9 million in negative delta, and then the following candle, which was this little runner right there, 50 million in volume, negative 7.1 negative delta, negative 7.1 delta. Okay. This starts our range. What's our next attempt to the low? This actually created no, not a divergence. Sorry. But look, nobody was interested here in selling. So if anyone was wondering, well, why do we get ranges? Because of stuff like this right here. You get 50 million in volume, negative 7.1 in delta, but then the next attempt at the low, it will tell you. People don't see this on TradingView, but on order flow, EXO, you'll see that nobody was interested. Look at that. This is actually made. This looks like a sell. There's actually buying in there, 370K in buying. Yeah. So essentially, when prices come into the lows, you're watching the delta, and in this case, the delta is significantly different from negative 7.1 to positive 370K. That's a scalp trade to the VWAP or to the golden zone. So one last time, let's look at this. 30 million, 2.4. Now let's look at the attempt we got at the golden zone when it finally did come. 17 million and 10. Then the following candle, 12 million and 3.1. Now this is an advantage here. On TradingView, you're not necessarily going to see this. RSI is going to look a little different because it's always moving according to the time frame you're using on. CBD is CBD, so it's looking at the active limit order that's in the market right now, and it's not going to change. As the time frame changes, that's not going to change. It is what it is. So that is 30 million, 2.4, 17 million, and 10. So the volume is decreased, but the delta has increased. So there's more active buyers here. But what did it give? It gave that bearish divergence. So from here, if you look, it's really, really hard. It's almost hidden, but there's the high right there, right? And I have to slide over because it won't let me put it over right there. Actually, you might. Let me just try. Okay, so then look at this. Right where we came into the golden zone, look at this CBD line right here. It's equal, if not higher, than this high. But on price, it's a lower high. So this is why context is important. We come off a swing failure pattern over here. We come off the swing failure pattern, the liquidity grab. We come off of that right here. Price comes down, increase in delta, negative delta, right? Price ranges out, but there's no buying power in here. When you look through this right here, when you look at the lows, what kind of reaction are we getting off the lows? That's a weak swing failure pattern. It took the low, but it's super weak. That's not a good low. That's not something I'm going to buy, right? So, yeah, you get this move up into the golden zone. You get divergence. You see, maybe you have a count for this, right? You see your count. You see that it's resistance. You see the context of the move, swing failure pattern. Back test because you never got it yet. So back test, and then price goes down. And then this is a whole other one that I had with delta and divergence. This was a good one, but we'll save this for another time. Thank you guys for listening. I hope you guys were able to learn something from this. I hope that the examples that I shared were insightful and that I maybe persuaded you to consider looking at Exocharts and getting a subscription for yourself. If you guys do decide to, and you have any questions and you're in the chat and you just get it going and you want some of these templates, if you want this template, this is not something that you will have when you sign up to Exocharts, this is something that I would have to share with you. So if you guys are interested, I'd be more than happy to share the templates that I have with you guys, of course, for free. And then as we move along, if you guys want to learn more about this, about CBD, about the open interest, about the net longs, net shorts, and just kind of how I use it to pull it together and hopefully give you guys some creative ideas on how you can implement it into your strategies and pull it together. And then other templates as well, like volume, other templates like session point of controls, London, New York, Asia close. How I use the session point of controls for scalp trading. Naked point of controls, how I use those for planning swing trades, day trades, just stuff like that. Just hit me up in the Discord, and I will do my best to help you out and share everything that I know with you. So that's all from me, guys. Thanks for listening again, and thanks. Any questions? Feel free, because I am done.
Awesome. That's pretty awesome stuff. I think I might be converting.
Yeah,
I
I think it's so insightful, man, because people don't see this. Like when you look at a chart and you have all different kinds of indicators, and I use some too, right? I'm not dissing or dogging indicators. We're trying to shame them, but this is so insightful because you can see like what are the bigger traders really doing. I think RSI helps, but I really rely on CBD more just because of the style that I trade. And I think that when you can see stuff like Delta, it can give you confidence that where I'm putting this order and I'm seeing that the delta is decreasing at attempts that are coming into golden zone. See, because like look at how this one played out. If you guys can still see my chart, look at how this played out. You had one opportunity in the golden zone, two opportunities in the golden zone, third opportunity at the golden zone, fourth opportunity at the golden zone. And look, they give the same pattern: swing failure, liquidity run into the golden zone. Delta's also decreasing the whole time too, but then you just get this move up. So yeah. All right, that's all for me, guys. What's
It's
that?
all like I noticed on your chart it says Bybit. Is that all perpetual volume? Is that only on the Bybit exchange that those deltas are coming in at?
No, that's actually a really good question. I'm glad you said that. I just trade on Bybit. You guys don't have to. If you guys want to use something else, then you can 100%. There's BitMEX, there's Bybit Spot, then you can search. Let me see if there's Binance here.
But like, where's your data coming from? All these deltas. Is it only from Bybit, or is it getting an aggregate of all the?
No, Bybit only. Bybit. Yeah, I personally think that Bybit has the most reliable order flow, and
Nice.
so I use Bybit. But you can also, I don't know if you pick this up, but check this out. If you guys look here, you can trade your altcoins too. You can read order flow for your altcoins. I mean, look at all that. There's ES, there's DOT, there's ADA, there's Mana, there's XRP, there's LTC, and then you got all your other altcoins here. You got Ape, you got Atom, all of it. It's all here, all of it. So if you guys, I mean, just imagine, just kind of take a moment and think about all the things or assets you trade that this could give you an edge on. I mean, you can look into all of it, any candle you want, and it's not limited to a time frame either. What I've been showing you guys was a 30-minute. What I'm showing you right now is a 4-hour. All right, and then now what you're looking at is a 5-minute. You can go down all the way to the minute, and you don't even have to just look at time frames either. You can come and you can look at if you have a preference and what kind of, like, if you want to clear up the noise, like that's why I have this volume chart, the 10 million volume candles, which I use more than the order flow. And I use these high lows because this is so OP. And I can show you how to use these too and a whole strategy around these. But yeah, if you don't want to look at time frames and you want to clear up the noise, well, if you understand how to read different types of charts, like you can purely look at delta, you can purely look at volume, you can look at the range chart, you can look at the trades, trend rev candles, point and figure, all kinds of different things that it has to offer there. So I do hope I was able to persuade you guys at least a little bit to take a look into it.
No, this actually
Because
confirmed
like what I've done for years now is just assume the delta based upon the volume and the swing failures. And now these charts actually show you where the delta is coming in at exactly on the candle. That's pretty neat.
Yeah, it shows you in real time too. I think that's the advantage, the big advantage. Shows you in real time, shows you the open interest in real time. You see this one right here. This whole candle was pure money, pure new money, new longs right there. You can see that there's no red at the shorts, right? So there's nobody shorting, only people longing, and it was all new money. So no limit. All this was all that market right there. So that's a huge edge too. Like when you're wanting to look at something like this, like is this trend good? Okay, A, B, C. Is this 5? Or if this is 1, 2, 1, 2, 3, ABC 4, and it's just so insightful. I find it very, very helpful. So I hope.
In these exocharts and knowing Elliott wave, do you see delta patterns with regards to a wave 2 versus a wave 4, or like as trend progresses? I don't know if you know.
I haven't. I know what you mean. I haven't ran data or statistics on that yet, but I do notice them with B waves, and C waves. Like right here, I feel like these are always the C waves. Like these swing failure patterns in the moves. I feel like those are always the C. Like a completion of that third comes down like, so you got your A, and then you got, your C takes out the beginning of B, right?
Yeah.
So that's one thing, because that swing failure, and that swing failure, you can see that one was common, bro. I mean, there was one there. There was there's one. Where was it? There. There's one there. There's one there. One
Yeah, that's
here.
basically all I ever trade is the swing failures. Like I
Yeah,
told you
that's why
last.
I knew. I was like, man, Chemo's gonna like this one.
I do. I like that. For $28, is that $28 a month for 1 month, or is that the price if you buy 6 months?
So that's actually for 1 month. But if you think about it, guys, there's other platforms out there where you're paying thousands of dollars just for stuff that's probably not as advanced as this. It's much more basic software, and it's much more expensive. It could be up to 500 to thousands of dollars. Now there is a free platform, but the templates are different, and I don't have the templates for these other platforms I'm about to name, besides one. But Sierra Charts is free order flow. But then in that case, you have to create your own template, your templates that are like this, like the ones I've just shown. And then there's Addis. And Addis, if you guys trade stocks, well, you can look at stock market order flow on Addis as well. And I have templates for Addis as well, but I'm not trading stocks right now, so I don't use it. But those are just a couple other avenues. Like if you guys don't like Exocharts, for example, because maybe everybody doesn't, right? Then you guys can check out some other ones too. So Addis and Sierra Charts, but I use Bybit. I'm sorry, Exocharts.
Nice. And Addis, was that a free one for Addis?
Addis is free for the first 30 days. So Exocharts will be free for the first 30 days, and Addis will be free for the first 30 days. And then I think Sierra Charts is just free in general. Don't quote me on that one, though.
Nice.
Hey, can you hear me?
I hear somebody. Is someone talking?
Can you hear me?
I hear someone saying, "Can you hear me?"
All right. Okay, great. Can you show me your footprint bar statistics setting on the inside?
Yeah, I can show you that. Yep.
Okay.
1 second, right here.
And
Bam.
also, how old are your templates from Chart Champions?
My what?
How old is the templates from Chart Champions?
They're not really. Well, it's kind of the same, really. I mean, I just modified them because to fit my preference and my style. Like this volume one, this isn't the one that Daniel uses. It's still volume chart, right? It's still the 10 million volume chart, but I have mine set up differently. If you notice, these aren't sessions; these are chart days. And then I kind of still use the high-low thing, but yeah, no, for the order flow, it's still essentially the same, right? I mean, it's going to be the same for anybody, right? You just set your ticks, you set your time frame, you put in your open interest, your net long, net shorts, and then you read the order flow. But yeah,
Yeah.
hold on, let me go back here.
Yeah, because I know sometimes they update their templates, so I'm not sure how old yours were compared to mine.
Yeah, Yeah. So for the most part, they're all updated. I just made improvements to what I felt like would better suit my style.
Yeah,
And
yeah. I did the
that's
same.
about it.
Yeah, I did the same as well.
Yeah, so Susan actually could probably shed some light on it too. I mean, do you find this is Susan, right?
Yeah. But remember, I also
Okay.
use my main system is Ishimoku. So Ishimoku for me, I think it's a second of course, but I don't only use of course, the footprint, but I also use Ishimoku as my main system, which is very, very accurate.
I couldn't hear you. What system?
Let me change my Bluetooth.
Okay. While she's doing that, is there anybody else who has any questions? Is there anything I can answer? Is there something that I maybe left unclear or unsaid that I kind of covered and left? Yeah, we can do that.
Record that. Put it as the nightly live stream for replacement of Jim since he's indisposed.
Okay, so let's see here. Okay, so we'll wrap it up then, and I'll wait for you, Seth. Just give me the go, and I'll